Good afternoon, everyone. Welcome back to another episode of The Turning Point. Today, it's just Edo, myself, and David. We do want to take a little bit more time in this episode to sit down with Edo specifically and hear what he's been up to. I know he's been putting out a lot of great content and just catching up overall, so we'll get into that here shortly. Before we dive in, I do want to start with the broader topics on the markets. We are witnessing another, I would say, coordinated sell-off in the markets, specifically crypto. And yes, it is chaotic on the surface, but there is a method or, a way of how all this madness does play out. And I think this is overall connected to the China-Trump trade discussions. We'll dive into that deeper here shortly. And there are a lot of headlines that are dramatic, and that could be driving the psychological response behind retail selling. Of course, this was coordinated at the institutional level, but I think majority of what I just said over there is theater, really, and it's designed to influence perceptions and, of course, to justify some of the further actions that we're going to see later on this year and into the next year, simply just laying out the groundwork for some of the major shifts we are going to see taking place, and, of course, to further justify some of the actions we're going to see as well. With the central banks and the money printing and so forth, liquidity interventions and injections and so forth. At the core of all of this is certainly tied to some of the larger geopolitical stages that we're seeing, where nations around the world are continuously looking for alternatives to the United States dollar, because the United States dollar has been weaponized. It's a tool of influence. We see sanctions, we see monetary policies that affect some of the bigger things that we're going to talk about here. And this is exactly why countries are exploring other mechanisms, other alternatives to trading outside of the reach of the United States hegemony and the political status here. And that's all tied to the dollar as well. As far as silver is doing very well today. It's $48, I believe, and some change. And we are trading above that. And we're going to see more squeezes into the silver physical market. What you see here is really just a manipulated price as far as the silver market. We see countries like Saudi Arabia, Russia, and even Mexico starting to treat silver as a strategic asset. And as economies continue to go digital, the demand for commodities is just going to rise. And that's all tied into the integration of the monetary system, where assets are going to be backing some of these new technologies that we'll see. Finally, on gold, we are trading above 4,000 per ounce. Let's be honest, central banks have been manipulating these markets heavily. And I think even they would take us to war before they begin integrating gold back into the system, because it represents real insurance against the collapse of fiat currencies. So without further ado, let's get into it. We are seeing a coordinated sell-off in the markets. Edo, let's start with you. Please give us some of your insights on what you think is going on.
Well, first, welcome everyone. So I want to bring a chart here to the screen. Just give me a second to share it, Versan. And that's BTC charts. So you guys can see on the screen, it's quite a very weak setup for a BTC right now. Looking for the short term, I am more optimistic about precious metals, includes gold, silver, and platinum. Now I want to actually go back in time before we talk about what's happening today, but we can't ignore the biggest liquidation event in history of crypto, which happened just a couple of weeks ago. We have massive positions that were liquidated, both long positions and short positions. So that really indicates that the markets are being heavily oppressed and manipulated. And there is only one reason why that's possible. Now, before I conclude with this Bitcoin chart here, there is a slightly more relevant chart, which happens to be this one that I'm about to pull on the screen. And we have spoke about this in the past. On the Turning Point, I did separated videos about that, and it's extremely important. I would argue that it's pivotal that you understand this chart here, especially if you are new to the channel. I know Versan and David, you were very active in the past months where I was absent from my channel, so there's a lot of new subscribers that weren't capable to see this in the last year, actually in the beginning of the cycle. So please notice that Bitcoin is made new all-time highs all the way above to $120,000. But we have been this entire cycle, I would call it a synthetic cycle, because as you see here, the volume keeps just decreasing. So it started back in 2014. You see this yellow line here that I put on the charts. Here, it's exactly when big financial institutions were accumulating Bitcoin. So they were indeed buying it back in 2014. They also bought in 2016. They also bought lots of BTC in 2018. And as you see, this goes together when the price was slightly below $10,000. So this gave the opportunity for insiders, market makers, exchanges to accumulate and centralize a lot of the BTC supply. And that gave them the powers to do what they have orchestrated just a couple of weeks ago, because now we are operating under a very low volume environment, which is very, very easy to manipulate the price. So basically, when you hold a substantial portion of the supply in just a few hands, that's the reality for BTC. I have also proven that with the dormant Satoshi wallets from 2011. That's a topic for another video, but let's focus here on this chart. So when you see that, yes, we were making new all-time highs. So the big lesson here is that you don't need a high volume to have higher prices, but you do need a high volume to have strong support levels. Now, what happens when you don't have support levels is that you can have institutions to pull the trigger. They can sell not even large sums of BTC or whatever currency they decide to manipulate, and that allows them to artificially manipulate the price. And that's very dangerous because that also presents a systemic risk. I would argue to the majority of the crypto space, I would argue that assets that don't hold utility are extremely dangerous to be held. Hence why we have been focusing on the ones that have real world utility and that are going to be implemented on the new financial system. That's your insurance against market manipulation. Now, for the record, most cryptocurrencies are trading dangerously below bear market prices. Think about all of the ERC20 tokens, most of them built on top of Ethereum, all of the currencies that were used in the past cycle to money laundry purposes. I have to say the reality here. You take all of the Atoms, the Matics, and all of the popular coins of the previous cycles, they have done a terrible performance on this cycle. That's a result of less active participants in the markets. I would say that the golden age of Bitcoin is over. So you have very low, I mean, nowadays everyone already knows what Bitcoin is about. So still, if you go see the Google searches is at below bear market searches. So there is a very systemic risk for BTC. And of course, let me bring here the other chart. So I want also people to understand what I am expecting here, which I have been very accurate on these predictions recently. Now, before anyone brings technical analysis, which I'm bringing myself, but I want to clarify, we can't focus on, I draw these lines on the chart, so we can't say this is a prediction because, of course, when we're talking about technical analysis, we can't ignore the macro scenario, okay? I can wake up tomorrow morning and maybe Donald Trump made a new agreement with China and he withdraw all of the taxation against Chinese imports, or perhaps he can come with something crazy on Twitter, and that's enough to destroy the entire technical analysis. So be very aware of who are you listening, and especially price predictions and people giving deadlines. I think that's very dangerous. However, the trend right now for BTC, it has lost this 117,000 support level. And I want everyone to pay attention to this yellow line here. So basically, this $106,000 has to hold. Otherwise, the next level that we have to watch for is literally 99.500. And if it happens here that BTC loses its support level, then it really becomes, I would say that 90%, it would be a very bearish indicator that can take BTC to a bear market. Now, what that means for XRP? Well, honestly, I think there will come a point where XRP is going to decouple from BTC. But that has not happened yet. So it's natural that if we see a correction for BTC, that will indeed happen for XRP as well. It can even retest perhaps $1.60, $1.80. I don't have a crystal ball to tell you. And my experience, how I am dealing with this downturn right now, well, the first thing is that's an individual choice. I don't sell XRP. I don't feel good at night if I sell XRP, like trying to time the markets and saying, look, I'm going to buy at $1.60. I don't do that. I will just hold XRP. Now, from the past months, I have been protecting my positions. I shrink my portfolio. I just hold the fundamentals. I would say that it's interesting to become like water. You want to adapt for both scenarios, regardless if we have some positive news or perhaps there's more liquidity coming in. I know sometimes when they low interest rates, there is a delay between new liquidity coming to the markets that can also reflect in the chart. So we want right now to be like water. You don't want to be extremely bearish or you don't want to be extremely bullish. So I would argue that be prepared for both scenarios, as I said, like water. Now, I have indeed shrinked my portfolio and I will be waiting for further confirmations to really know how I'm going to play the next months on this cycle. And if you have been following our advice, especially with me and Versan, we had so many calls, private, talking to each other. Even here on the Turning Point, we have said how we have played with the markets by trading other assets like SHX. We have been buying at lower prices, does a 3x or 4x. We sell it, we wait for the correction. We keep doing money just by trading spots. You don't necessarily need to use leverage. It's very safe, I would argue, to trade when you trade just by spots without derivatives markets. And when you focus also on coins that have a lower market cap, they have much more volatility. So meanwhile that XRP was going from $2.50 to $3, $3.20, you had SHX that was doing 3, 4, 5x's. So you could just profit from this price volatility, sell it, buy more XRP, and just repeat the cycle. This is a personal strategy that I have been following. And just to conclude here, really have this in mind, 99.5 thousand. That's not only a psychological threshold, but it's also from the technical analysis perspective, is extremely important to hold this. Otherwise, we might see a very big correction for the markets. And remember, a TA is just one piece of the puzzle. We can wake up tomorrow with some different sorts of macro scenario change and everything can change for next week. We never know. Right now, I am not very optimistic on the short term, and I want to hear both of your takes on that, Versan and David.
Well, if you don't mind, I can kind of chime in. I think I agree with you on the sentiment side of things. I mean, definitely the psychology of the market is a massive deal. And we've seen a lot of influence in the psychology of the market where, big players are putting information out there to intentionally, manipulate, the environment, the mindset. Retail is very easy to manipulate. That is something that has been traditionally true and proven over time that, that groupthink can be easily influenced. I think a big part of what you showed there in the beginning with the volume, when you can see the volume of this asset going down, yet the price is going significantly higher, you can really see how that, manipulation. And I think Versan recently. I believe I was watching you and Ben Del Versan on a Paul Barron podcast, and during that interview, one of the things that you brought out is the fact that this particular ecosystem that we're involved in, especially with XRP, has been one of the most kind of like manipulated, the whole psyop that goes along with it. And I do believe that utility is going to prevail. Bitcoin, from my perspective, does not provide any real utility whatsoever. And I do believe it will turn out, as we've seen that volume decrease, is going to be probably one of the biggest rug pulls that there's ever been in the history of mankind, because of the fact that I do think that in a global crisis and something like a major economic collapse, that a whole lot of this is going to unfold, and only a few things are going to be able to kind of survive that. I think those are the ones that are going to be able to provide the solution to that problem, that massive liquidity issue that we're dealing with, and the fact that a crashing market. And in the meantime, of course, yes, you can't really rely on technical analysis. I think it is definitely there's substance there. However, a lot of it is theory based. And to your point there, Edo, a lot of catalysts have not yet happened for XRP yet. For instance, we have not seen November 25th roll around where the ISO messaging standard gets fully implemented globally. And there are not going to be any more extensions to that. I think that's going to be a big catalyst. Yes, the ETFs are going to play a big role in terms of, the spot ETFs. Now, there's about 20 ETFs out there. 7 or 8 of those are spot. They're going to have to go in and hold the underlying asset, competing with one another to buy it. I do believe the SPACs, these special purpose acquisition corps that are going out there, also accumulating. The OCC license for Ripple this month, I think, is going to be announced, and that might also provide a very big pump into this ecosystem right here. Some of these assets, right now we're seeing a lot of downward pressure, but I do believe that we will see another move up. Now, having said that, does that mean we're not going to enter into whatever you want to call it, a bear market or whatever? Well, for every bull market, there is a bear market. The thing I kind of focus on, especially with XRP, is the long-term prospect, its utility, how it will change this new financial system, and the real world the tokenization of a lot of real world assets. When you hear Larry Fink just recently talk about the tokenizations of ETFs and this and that, well, that has been on their desk for a long time. This is an end game proposition. I do believe that is going to happen. And remember, as investors, we're not throwing darts at balloons, but we are definitely speculating. And if I'm going to place my speculation, it's going to be based on a balance between the sentiment, the technical, and the fundamental. And I'm certainly not going to be putting my, eggs in meme coin, baskets, or, all this kind of stuff, or even privacy coins. I think legislatively they will get crucified in a new digital economy. They are not going to allow all those things to actually make significant moves. Therefore, what is left for me as an investor is, of course, things that are going to be absolutely utilized to implement the new economy that's coming. And in that capacity, I do think commodities like gold and silver are going to have a tremendous role. A tremendous role. And this is where I do believe that, there is a measure of diversification that as investors you want to be considering. Because does it make sense for us to ride things all the way up only to ride them all the way back down? It doesn't. In fact, it's in those capacities that a person can, if they are wise in doing it, can, go out there and actually grow their position sizes. Now, having said that, I want to conclude with this piece right here. A lot of people have this concept that, XRP or different things will not be available for us to buy. Now, I understand the premise behind that, but I want to kind of throw something in there, with respect to those that are thinking that, oh, well, if I sell now, I won't be able to buy later. At one point, Bitcoin was a penny. Now it's like reached what, $126,000. You got nations that are holding it in their strategic reserves. You got, countries that have made it even legal tender. Institutions, as you so pointed out there, accumulating into the billions, yet you and I can still buy Bitcoin. There has to be a supply and demand relationship for there to be any price for any asset in this capacity. Even with gold, supply, demand, supply, demand. If there is no supply, demand, there is no market, then how can we absolutely establish a price? And the other thing I want to throw out there is this. Mentally, most of us are still balancing, or kind of measuring would be a better word, measuring the value of these assets against the very system that we believe this is replacing. So we're saying, okay, XRP at $1,000. Well, then you're still measuring that value, that XRP, against the fiat system that it's replacing. And to me, that doesn't make sense. We need to start thinking of these things in their own intrinsic value. What will XRP, one XRP, for instance, if you want to measure it against it, is how much, what will that one XRP buy you in terms of real world assets, land, gold, silver, stuff that is tangible. And so that's how I kind of think of it, not in a failing currency. So yeah, my thinking is that yes, we can see corrections, but ultimately at the end of the day, these assets are going to have tremendous value because of how they're going to be measured against the ability to acquire or hold on to real world assets. I hope that makes sense, but that's what I think.
No, it makes incredible sense. You both did some terrific analysis over there. To your point, David, most people do think XRP is really just another cryptocurrency, but when you actually look at this a lot closer, it's not driven by speculation or hype. It's actually driven by pure mathematics. It's driven by pure economics and global liquidity. So we'll be covering that a little bit more later on. As far as how we're going to get there, and this is where the regulatory environment and landscape is really so important. What I have here displayed is the Clarity Act. And the Clarity Act is really going to be another turning point, you could say, for the United States digital asset ecosystem. And it's going to separate the noise from the real technologies that have a use case. It's going to differentiate the strategic assets with genuine utility compared to those that do have a speculative noise inside to it, which pretty much dominates the entire crypto ecosystem. So I do want to be clear here that I'm not actually cherry picking. I think only a handful of select assets in this ecosystem that are actually solving real world problems that we created. The problem reaction solution framework that we've discussed here extensively. So select assets are going to be implemented and regulated. And the Clarity Act, more importantly, it's very significant because it provides that framework that's been in the making for so many years. And we already see sovereign nations adopting to these alternatives to the US dollar safely. So at the same time, even the United States is taking time with all of this. And that's why it's been dragging out. So they can defend themselves. And this is kind of national security issue, you could say. So that's what they're doing. They're simply positioning themselves for what's already inevitable and what's been in motion for many years. And I think the Clarity Act, more importantly, it's probably going to put 99% of all cryptocurrencies on the securities side, if you really want to be clear about it, because most digital assets are securities. And this is where meme coins come in. And, it's so sad. The last sell-off we had, I had a dear friend of mine who lost $36,000 in a meme coin, and it hasn't moved back up yet. I sat down with him, talked to him. I didn't want to be the guy that said, "I told you so." So I kind of just let him just vent if he needed to, because he lost everything he had in crypto. And I told him to stay out of it. He just didn't listen to me. So this is why doing your research is so important. This is what institutions are doing. And all we've done is really aligned our thinking with what they're up to. And when we look at Ripple's ecosystem, RippleNet has continuously for the last decade really dominating the financial infrastructure. So this much is really clear. And if you look, their annual conference is coming up. This is the Ripple Swell. And I think, overall, those who attend, I'd like to hear people bring in some new insights, maybe some questions about how long this is really going to take. What happens if the United States slowly, doesn't regulate these assets and kind of drags it on? Is the world going to go on without us? And I think that's something that could be playing out. Um, Also, if you look at this market seriously, this is why strategic insight matters so much. And this is why I always, reiterate for people to revisit some of the discussions we've all had here together, because I think we've carried a lot of the weight over the years. And a lot of people who are new to this ecosystem, I encourage people to go back and listen to some of the things we discussed. Kind of sets the stage for what's playing out in real time today. And final takeaway on all of this is simple. You need to focus on strategic investments with real world adoption, understand the regulatory frameworks that is really going to distinguish utility from speculation. And please just avoid all the noise that you see. And I think that noise is dominating X, it's dominating all of social media. And that's really how you're going to position yourself for the future. Final thing I do want to say on Edo and this market sell off, it's about Bitcoin. And we've had so many discussions about Bitcoin, and unfortunately, even discussing Bitcoin, Edo did have some issues once where they removed his X account, and simple because he told the truth. He did really good research. He brought this to light, and the next thing you know, he was removed and penalized for this. So we have to kind of be careful here. But so far from the discussions we had over the years and what we've pieced together, we believe that Bitcoin's role now is beginning to shift. And there are only really two different outcomes for Bitcoin at this point. And I think it's a tool for a short-term tool for sovereign debt settlement, short term, and of course, a liquidity engine to really bring in capital from FOMO and other mechanisms that are simply financing this transition that we are talking about. And then there's the other harsh reality of what we've been seeing, and this is exit liquidity for the debt markets. So it's entirely possible, really, that the Bitcoin holders, the hodlers, especially the early ones and even the late ones now, are eventually going to become the final buyers of government debt. And basically, what they're doing by holding Bitcoin, you're actually absorbing toxic assets in the exchange for the illusion of wealth. And in this process, I think you actually, the Bitcoin holder, becomes the last link in a broken chain. You see what I mean? And basically, you're going to be used as exit liquidity to settle the liabilities of the very same institutions that you thought you were escaping. And the final playful thought around Bitcoin is what if Bitcoin is using all this speculative money to finance and fuel Ripple's infrastructure? For all we know, where is Ripple getting all this cash from? I'm just saying, I'm throwing out these questions, right? It's possible that Bitcoin is just acting as the on-ramp. You know what I mean? So it's transfers this store of value BS around it into the liquidity frameworks that are being built by Ripple, that are being built by Stellar, and these regulated rails. So just something to ponder on. But the more you look at Bitcoin, the more it doesn't make any sense. And the more you look at Bitcoin, the more it starts to look less and less like freedom money as people claim it is. And it more looks like raw energy melted down to power a smarter financial grid.
I would definitely agree with you, especially on the store of value piece. If Bitcoin's a store of value, that's one of the most volatile stores of value you could ever possibly have. It's almost an insanity that it is getting this designation as a store of value. It is not anywhere near gold, and it's certainly not digital gold, that's for sure. I mean, if you were buying Bitcoin at the top at $126,000 a Bitcoin, and I think today we're at what, 106 or something like that, how would you feel about your store of value? You wouldn't be you would not be thinking it's such a store of value. And the fact that it is really backed by nothing but confidence. Bitcoin in and of itself is simply just a fiat. Fiat basically means that the only reason it has value is because of the confidence that people put in it. Not like unlike a real world asset, land, gold, silver. I mean, those are tangible things that have had value for thousands of years, no matter where you are on earth. And that makes gold and silver and commodities like that very agnostic. And so those I do consider to be genuine stores of value, real world assets. In the investment field, It's where we're seeing utility. Now, if it does not have any utility, and according to the white paper of Bitcoin, it was supposed to be, a new means of transferring, peer-to-peer value outside of the current financial system, right? And they were all against banks. This is one thing that they hopped on Ripple and really were against XRP because it's a banker's coin. Remember that? Well, come on. The majority of holders for Bitcoin right now are major ETFs, the banks, all these institutions, MicroStrategy, and all that. I mean, they just got right under the covers. So they haven't even lived up to their own white paper, according to what they said. And this is why I believe that it is a massive psyop. There's zero doubt in my mind about that. Considering the fact that SHA-256, the encryption method for Bitcoin, when Bitcoin came out in 2009 and 10 was an NSA, that was a secret. And how in the heck does Bitcoin come out with that when, so this is the whole nefarious bit of it. Now, utility in terms of actually being able to tokenize real world assets, XRP Ledger does that. And it does it significantly well. And you're talking about an organization like when you take a look at Ripple, they're taking the transition of what, this XRP, when they do convert it and all that, and they're using it for ODL. Well, what are they doing with it? They're buying infrastructure. Hidden Road, which is now called Ripple Prime, clearing agency. G Treasury, you're talking trillions of dollars of corporate cross-border transactions. Big. Custody, standard custody, Matako. You're literally watching a framework for what? The infrastructure for a new financial system unfolding. Bitcoin has none of that. It has sentiment and it has a powerful publicity network behind it, but it has zero utility. And so for me, it is a pretty terrifying prospect to think that people would even equate Bitcoin with a store of value or digital gold.
Totally agree with both of you. And especially when we look at BTC white paper, it reads a peer-to-peer electronic cash system that tells you everything you need to know. It was initially designed to be a currency, and now people are saying it's a store of value, but it ended up being none of them. I mean, when you have such a price action of an asset with very low volume that can have extreme volatility and drop 20-30% in one day, it's definitely possible. That's not a store of value. So there is definitely something wrong with BTC. As I said before, the golden age of Bitcoin is 100% over. For me, that's a fact. You can't even discuss that. When you track the movements on chain, you see that vast majority of the supply was mined back in 2011. So there will never be enough liquidity to sustain price action because there is all of these massive institutions that are continuously offloading BTC whenever it approaches a new all-time high. But most importantly is that it's not even back. So fiat currencies are already being continuously devaluating, but BTC is not even backed up by real dollars, which is even more scary. It's actually artificially inflated by USDT, which happens to be the stable coin. In other words, and let me bring this back to the screen, Tether, and this is from 4 years ago, but it's still relevant. They were fined in over $41 million by the CTFC because they lied about their dollar reserve. So basically, USDT is not even backed one-to-one, but we can't even say it's a small gap where perhaps it was a 5% or a 10% mistake. When you actually go to read the statements here, let me find the percentage. So data from the regulator suggests that Tether only had sufficient fiat reserves to back USDT for just 27.6% of the time. So this already tells you everything you need to know about USDT and how they have been artificially inflating this. Let's call it how it is. It's a bubble, has no intrinsic value. Now, when we talk about utility, the history will be completely different. That's why we are heavily invested in digital assets like XRP, XLM, and some of the few others that are going to thrive on this new world economy. Now, there is one question that I want to answer before I continue what I was saying, but someone asked me if it's okay to have, it was here in the comments, XRP on BNB chain. And just to clarify, there is no XRP on BNB, so XRP only exists on the XRP ledger. If you hold XRP on BNB, it's a wrapped version of XRP, which currently can have the same value, but I would never rely on holding that asset for the future. So you can't, and this person asked if you can send the XRP on BNB to the XRP on XRP ledger. That's not possible. They are two different messaging systems, two different blockchains. What you have to do is you need to go on BNB, sell your XRP for whatever stable coin you wish, and then just proceed to buy XRP on a different platform. And then you're going to have your XRP on XRP ledger, which is the real version of XRP. Now, coming back to what I was saying and touching on the Genius Acts, that means stricter rules on stable coins. So basically, that goes back to Tether not being a transparent company. That's why they are already moving their headquarters away from the United States. They go into jurisdictions that will perhaps bring benefits for them or will not be so harsh on them. The fact is that we're going to have one major winner from this change from USDT in the United States, or USDT being the number one stablecoin. And it's just, you can't make this up. Which company in the United States has released recently a new stablecoin, which happens to be Ripple and real stablecoin on the XRP ledger? They are preparing for this transition. That's why XRP comes as the biggest winner on this entire change that's happening right now, especially when they will eventually sacrifice USDT. I don't really know when that's going to happen, but at some point, USDT will not account for the number one stablecoin. And what do you think is going to happen with the accounts on the XRP ledger? Everyone using real stablecoin is going to be obligated to have an XRP ledger account. And whenever that happens, it's a new gateway for mass adoption. And that's exactly the moment that we are waiting for.
May I make a statement? First of all, great analysis. You're absolutely right. Somebody left a $1 tip, so I'm just going to be a professional courtesy, respond to it. And I'd love to get everyone's take here. In fact, this would be fun. Thoughts on Jake Claver's $100 by end of the year? Well, first of all, it was $100. Then it was $700. Then it was $1,000. So which one is it? I think the conversation around XRP for a very long time and until today is driven by speculation and price predictions. I've seen it for years. I simply don't do it that way anymore. It was really 2021 when I stopped giving price predictions because I started to understand really the fascinating story behind the scenes. One that is about bridging regulation, sovereign integration, check. And of course, institutional recognition at the highest levels of global finance. Now, we can confirm that the IMF has certainly been interested in Ripple's role and XRP specifically, even through the BIS. And you're going to see a time where this gets full recognition. But for that to happen, we have to basically, for XRP to be recognized as a global reserve asset, there are a few pillars that need to align thoroughly. So sovereign adoption, we do have that. That's check. The regulatory clarity through the Clarity Act. So that hasn't happened yet. It is going to happen eventually. And then, of course, the institutional recognition, which we do have to a degree. However, we don't have it ultimately coming from the IMF. And when you start to break this down, you get really a fuller picture. Before any asset could become a global reserve instrument, it first needs the sovereign legitimacy, which it does have. Reserve assets, typically, whether it be gold, US dollar, electronic special drawing rights, that's an ESDR. They are going to derive their credibility not from the speculation in the markets, but from the acceptance and the usage by nation states. So in practice, it means basically XRP has to integrate itself within the financial system in multiple countries. We've successfully achieved that. But the central banks, treasury departments, the state-backed payment infrastructure. So we are seeing this gradual, little by little over here. And XRP has successfully achieved this alongside XLM as well, Stellar and Ripple. But it's going to take some time for the big institutions to realize, you know what, we're ready to migrate this ecosystem. So I don't know if we're going to reach 100 by the end of the year, but it is absolutely possible. It all depends on how these things actually play out. And from my experience, being in this ecosystem for 7+ years almost now, these things do take time. So 7 years ago, when XRP was at 18 cents, and so I was telling my friends about this on Instagram. I didn't have a YouTube channel at the time. And I was telling people this was imminent just because of the current environment, even back then. None of it was imminent. Look where we are today, 7 years. We have confirmation on 90% of the stuff we've talked about. I'd say 99%. But what are we waiting for? I think we're waiting for institutions to fully integrate the frameworks. And more importantly, like I said in the beginning, the regulating, bridging the regulations through different tokenized economies and ecosystems and emerging markets like Africa. So we're going to get there eventually. I just don't think that we're going to see it by the end of the year. And finally, as long as XRP is coupled to Bitcoin, it's coupled to the debt market, which is ultimately coupled to the stock market and all other markets around. So I think for XRP to really show its true potential, I've always said this, it needs to decouple. It needs to be fully recognized as a strategic reserve asset. So we're not there yet. So I don't think it will hit 100.
I think I would. I think I would concur. One thing I would throw out is, you basically said there that we're waiting on institutions. Well, institutions are waiting on clarity, and I think they're also waiting on the signal that you can move now. Because I do believe that the infrastructure for this new digital economy has been laid out many, many years ago. I think central banks are working together coordinately with their regulation and their legislation. Now I've talked both with Jay Claver, both publicly and privately. I know that publicly, he has come out, he's made some pretty big bets saying, hey, look, I made a bet that it'll hit this at the end of the year, but he did quantify that, look, that's going to happen in an environment like you just described, Versan, that, we're going to see the utilization, not just adoption. We know that institutions have adopted the technology. Come on, we know that for a fact, but it is not being applied. It is not being totally utilized on a global scale as of yet, but it will be. And we know that it will be. The only thing that we don't know is how long is it going to take us to get there necessarily. But we can definitely see, the infrastructure for this digital economy that is being laid out. And, one of the things that I mentioned the last about 2 or 3 different turning points ago is that the Treasury Department came out there and they solicited commentary from market participants about the digital identity and how to incorporate this into the new digital economy in a way that protects privacy and all this kind of stuff. But they definitely intend on employing that. Well, that is because, like you had just mentioned there, you're going to see the only way in which this can happen is if everyone's got these wallets that we're all able to interact with, which are connected with our, our health, our medical, medical health, same thing, education, obviously our financial, all that kind of stuff. You pointed out as well about the debt market. And I do believe that we are going to see some sort of an implosion. The debt market really controls everything, and every other market feeds off of debt. Well, the Genius Act, the way in which it's written, is to ensure a buyer for the debt. That's the whole point, that stable coins that are going to be, balanced against the US dollar are going to actually need to hold treasuries. That's right in the Genius Act. So now you got a permanent buyer for your debt. or at least one. And this is where I do believe, yeah, they could offload a lot of that liability onto the consumer in a big way. And leading to a cascading collapse of the current system. And immediately thereafter, I believe an introduction to the new system. They're going to have a catalyst. This is where I think, the whole phoenix rising from the ashes concept for XRP comes into play. At that point, I don't think there'll be much retail left when that happens. I really don't. And I think either they'll get bought out or shaken out or whatever the case may be. But the reality is yes, will XRP hit some staggering numbers in an environment like that? I believe it can, like you just said. I mean, it is very, very difficult because there's so many things that we could say for all the years. And I've been in the space a lot of years like yourself. And there are times where we thought it was right around the corner, just because the environment made us feel like it was right around the corner. And we're definitely closer to it than we were then, for sure. But there are a lot of things that need to take place, factors that need to take place. And I have often cautioned people to do not hitch your expectation to somebody else's, price prediction wagon. That's not the way to think. You want to start thinking more strategically about your situation and what could it look like for you? And are you at your accumulation goals? How are you balancing that towards your financial goals? And to be very, very strategic in doing that. And I personally would never make any investment based on someone else's conviction, that's for sure. And so this is where I kind of come out and I think, okay, could it happen within now to the end of the year? Could we see $100? Well, I think a lot of dominoes would have to fall for that to happen. So the probability is not likely. The possibility is, yes, it is possible. But that's kind of where I think about it.
I definitely want to get Edo's take on this. This is going to be interesting.
Well, to start my take, I will come with two quotes from David Schwartz. One is that you can't expect the financial system to change overnight. And the second one is that it's very dangerous to arbitrarily say that something is impossible or will not happen. That being said, I don't think XRP is going to be $100 by the end of the year. However, that's not something entirely impossible. And I would say that from all the digital assets, the only cryptocurrency right now that could make such a move is indeed XRP, because we all know there is a supply shock that's built behind the scenes. However, I don't think the whole scenario, the whole macro scenario, and all of the factors that Versan was listing before is not ready. The whole infrastructure is taking quite some time. So I don't think XRP is going to be at $100 at the end of the year. And I think there can't be greatness without destruction. And that's exactly when comes the Phoenix idea of XRP, that it will indeed rise from the ashes. And I think before XRP hits $100, which, by the way, I believe $100 is going to be only the beginning, but it's not my style to give price predictions with deadlines. I don't do that. However, I think it's not fully ready yet. But as I said, it's not entirely impossible. We could wake up tomorrow and there could be some black swan events that wipes out the majority of ERC20 tokens, or perhaps BTC as well. That liquidity flows towards XRP and boom, we are at $100. Now, if you think that's likely going to happen, I would argue that I don't think it's going to happen tomorrow. I don't think it's going to happen in the next 2 months, but I don't entirely rule out this possibility. That's my take on that.
Yeah, well, I think, as we move into the new year, and regardless, even where we are today in this environment, for those I think who are realist about the situation, we're still under central bank rule. They are continuously robbing us blindly, and most people still haven't figured that out. So when you look at inflation at the grocery store, there's no such thing as inflation. They're just creating the situation where we're paying higher and higher prices. And it's because our currencies are continuously being devalued. So you need to protect your wealth. by owning real physical tangible assets. That's gold, that's silver, that's platinum. And of course, the secondary layer would be digital assets. The ultimate hedge against a system where dollars and fiat currencies are gradually losing their value, but it's only accelerating. At the same time, I still encourage people to have a very small reserve of physical cash. I've talked to these guys off record a lot about this, and I've shared my cash positions with them. And I hate the fact it's sitting there; it's not working for me, but it's still a universal language. You take a cash to a gas station, they'll still understand it. If you take gold to a gas station to actually transact with, they still wouldn't understand it. And that just shows you how uneducated most people are a little bit in the financial system. So they don't really know what the hell's going on. But the big banks, the one percenters, they know exactly what they're doing. And beyond holding physical assets, you need to protect yourself by investing simply in the infrastructure that is shaping the financial landscape moving forward. Going back to Jake's statement, I've always agreed with Jake. He's very well informed in this ecosystem, and he's absolutely right. It's just there are certain scenarios that would have to play out for those prices to be achieved. And I think the next turning point, like I said, for the digital asset ecosystem is going to be under the Clarity Acts framework. And this is something very interested Unknown DLT talked about on X, who inspired me to write that article on the drops in XRP. Ripple really does have to keep some of its holdings, its XRP holdings, below a specific percentage to avoid triggering any securities classifications. And I don't think this provision is merely about the legal stance and housekeeping of it. It's really the key to global scalability, if you think about it, because as long as Ripple maintains substantial control of the XRP circulating supply, like many people have argued against in this ecosystem, then yes, institutional and sovereign actors can face regulatory hesitation simply because governments can't integrate or hold an asset that is subject to the corporation's control or potential manipulation. So I do agree with that. And simply by reducing its holdings under the Clarity Act, Ripple effectively then decentralizes its influence over XRP. And that makes it more of a legally neutral, non-sovereign, globally accessible requirements that are necessary for an asset to achieve global reserve and settlement status. So I think the Clarity Act is really going to be that compliance threshold that will take XRP to $100 potentially, or even higher than that. For those who followed my research for a very long time, I did share with people once in 2021 where I did see XRP actually at 327,000. I know it sounds crazy until today. But this shows you the sheer scale of volume that the XRP is supposed to handle. And I do believe that's going to happen later on down the road, which is why I've encouraged people never to sell your XRP. Instead, play this repeat cycle with liquidity cycles. As long as they're injecting fake capital into the market, you're able to take profits from other digital assets and quickly rotate that into fiat currency so you can go buy tangible assets. And that way you can protect your value and your wealth and preserve it with some anonymity in a situation where all anonymity is being taken away gradually, little by little, as we're all pushed into the digital ecosystem. So it's a very simple strategy, but more importantly, I think that's how XRP is really going to outperform the rest of the market and maybe even decouple, because it was always designed to decouple. I don't think XRP is a cryptocurrency per se like the rest of them. You have to understand this a bit more. And it's driven by math, it's driven by economics. And when you factor that stuff in and the fractionalization in the drops, it makes perfect sense for XRP to be used for institutional transactions and everyday transactions because it's divisible. So I can go on about this for
No,
longer.
it's very good. Very good. And it's a very good point. It is divisible. I mean, there could come a time when, for the most of retail, one XRP is outside of their reach, just like one Bitcoin is outside of the reach of most people, but you can buy it by Satoshis. You'll be able to purchase these things by drops. I think another thing that we need to definitely consider is what the value of it would be in a hyperinflationary environment. Back in the Weimar Republic there, I mean, you would take a wheelbarrow full of cash, to purchase like a loaf of bread. And we've seen those pictures from back at that time. See, the thing is, most people think that a hyperinflationary environment cannot happen inside the United States. Well, that's not true. It most certainly can. And in that environment, of course, real world assets like gold and silver will definitely be stores of value, but certainly there will be those digital assets that will also provide a safe haven. And in that environment, yeah, you could see at one XRP measured against some significant numbers, like you just said there. I guess it would be massive hyperinflation, but at $300,000 or whatever. But the thing is, a lot of people ask, well, hey, what's $1,000 going to be? And 5 years from now, I throw it out there. Well, it's going to be $1,000. That's not the question to even ask. Is what will that $1,000 buy you 5 years from now? It's the value of where we are with our currency, and these are debasing big time and fast. And so, in that capacity, measured against a falling fiat system, then yeah, XRP could be measured at really high numbers. And this is where I really get back to the whole thing. If we choose the measurement requirement that we're using, we start not measuring this against dollars, but start measuring it against value in terms of what can it, in terms of land or other things, commodities that we could actually measure it against. Measuring it against dollars, it's the whole argument, like with gold even. Did the dollar go down or did gold go up? Did XRP actually rise in value, or did the dollars purchasing it drop in value? And so I think we could see XRP at some major numbers, but it could also be because of the hyperinflationary environment that we'll be living in.
Great point, David. I would even argue that if you take Bitcoin price at the previous cycle, I guess the all-time high was near $70,000 back in 2019. It was more valuable that a BTC in 2025 above $120,000. That's because currencies are getting extremely devaluated, not only for the dollar. The same history happens in Europe. We never had massive inflation, at least from the 90s onwards. And then suddenly in 2019, the purchasing power of the euro has gone down, I would argue, 300%. Everything has gone from, if you go for groceries or if you go for clothing or if you go for housing, everything has at least tripled the price. In some cases, even more. And if you talk to anyone in Europe, you have no idea how many people are struggling to just make it to the end of the month. People are having to work for multiple jobs. I know especially people my age are struggling a lot with this situation, but that's not only in Europe. I have been traveling. I have been to more than almost 40 countries just in the last year, probably 12 or 13 countries. And everywhere I go is the same. People complain about the same identical problems, and they think that their country is bad, so they're going to move to another country because it's cheaper or because the salaries are higher. And then what happens, let's say if you are in Europe and people have this idea, I'm going to move from Italy, I'm going to live in Switzerland. And guess what happens in Switzerland? Everything costs 5 times more than Italy, despite the salary being higher. The point I'm trying to make is that that's a global problem, and everyone is suffering with hyperinflation. That's exactly the reason why we have to lock in on these moments, because the middle class is getting wiped out. Not in America, not in Europe, but in the entire world. That's a coordinated plan. All governments are colluded on this massive destruction of the middle class. Don't think because you're going to vote for right or left, or you're going to move from America to Canada or from Greece to Italy, that's anything is going to change. The only thing you can do to protect yourself is by investing in precious. That's not a financial advice, it's just my opinion, but hold anything but cash. I panic when I have too much cash on the bank and I just see the price of everything increasing exponentially, and how quick the prices change and how quick you can spend cash. That's why I have been investing in hard assets, cryptocurrencies, precious metals, properties, and that's how I have been thriving in these last years in crypto and in every area of my finances.
I totally agree with you. I want to clarify for everyone, when you said not to hold cash, you mean don't hold too much cash in the bank is what you're referring to. Okay, good. just to clarify that, because I don't even encourage people to have that much cash in the bank. Bank was always supposed to be the intermediary between you and whatever, you're paying or moving money around, and that's pretty much it. It was designed to be that intermediary. Instead, it's turned into it's weaponized. The banking system has been weaponized against the people. And they pretty much take your money in, they hold a very small amount. That way, if you need to come get it all at once, you can't. They have to order the cash from somewhere else, and they loan it out to somebody who their accounting is going to default on that, so they can confiscate their assets and keep the money and charge interest on that. So certainly is a Ponzi scheme. One thing I do want to bring up is the FOMC meeting that did take place. And I saw somebody in the comment here mention the whole gold coming down. And also, I've been asked recently about the markets. They've come down. Are the markets going to come back up? And I have a very short, simple response to that. As long as we're expanding our debt, the markets are always going to go higher and higher. That's called permanent asset inflation. It's kind of baked into the cake already. So markets will come down, but markets do continue to go up overall. And that's why you need to hold gold. We do see central banks manipulating the gold price, and that presents opportunity, in my opinion. Whenever gold continues to rise, and it's happening for multiple interconnected reasons, you have central bank buying, you have institutional accumulation, and even the retail interest now. And this is all converging at the same time. So simply, we're preparing for another phase of releveraging, and that's why gold has came down slightly. And releveraging means central banks are effectively going to interject again. And when they say we're going to interject, they're talking about liquidity injections into the system. They're talking about increasing the M2 money supply. And that means they're going to be able to use that money quickly to go buy gold back on those dips again. And when you add in the 42 million Americans about to lose their food stamps, very cruel, very evil, but this is tied into a lot of where the money is simply being redirected. And that means capital is actually going into the institutions who are positioning themselves for this infrastructure. So, like I said before, we're not living necessarily through a great reset. We're living through a heist, and people are being robbed blindly. And it's very sad. It really is. But this is why you need to preserve your wealth at the same time as investing in the infrastructure for the future. So, to anybody asking about gold, should I buy it? I'm telling some of my wealthier clients that they should be buying gold on the way up. It really doesn't matter. All you need to do is look at the gold price and you simply invert the dollar's purchasing power. Have the fundamentals changed? Absolutely not. So if the fundamentals haven't changed, the overall macro picture hasn't changed either. Everyone needs gold. I mean, this is what the wealthiest people in the world are doing. They're not just investing in cryptocurrency. So I just want some of you guys to think about that. Gold is going to make another high. It really will. And I think by the end of this year, it's even potentially it could reach $5,000.
I think you make a good point that it's important to not just look at the fundamentals have not changed. Has the sentiment changed? Yeah, sentiment's changed, but sentiment is very easily manipulated, as we know. And so this is where you can't trust the sentiment. And it doesn't take much to change sentiment, does it? I mean, you watch gold just drop a little bit like that. Oh, sentiment's really changed. But the fundamentals, all the reasons for why a person would want to hold a real world asset like that have not changed. In fact, they've only gotten stronger. And I also believe that about this digital asset space. Yes, the sentiment has changed, and it's not hard to change retail sentiment. I mean, you just drop the price 30 cents and you watch the sentiment change in XRP. Now, ask yourself, though, a question. Did any of us get into XRP for those 30, 40-cent moves? I don't think so. I certainly didn't. What are we looking for? We're looking for the implementation and the real application of these things. And at those levels is when we would even consider the possibility of maybe taking some off the table. In those situations, of course, most people are thinking about how they might be able to utilize it with the infrastructure. I wouldn't do this right now because there's a lot of predatory lenders out there, but you might be able to lend it out, or take loans against it as collateral. You may be able to, be incentivized by major banking institutions to quote unquote stake your XRP. Now we know that XRP is not a proof of stake blockchain, so please don't fall for all these phony staking platforms that are just there to steal your XRP. But there may be that possibility, and that's the thing, is you want to zoom out, like you were mentioning there. When in doubt, zoom out, look at the broader picture. Fundamentals haven't changed, sentiments changed. And you got to understand the psychology of the market if you're ever going to make it. If you're ever going to make it, you've got to be able to understand that type of thing and know what you hold, whether that be real world assets like commodities, gold, silver, platinum, or in this digital asset space. And then you have to have a why. Oh, there's a what for sure. But a lot of people haven't defined their why. They're doing it because, well, so-and-so said thus and such, or this person said that, or whatever. And no personal conviction. I mean, Versan, Edo, myself, we have done a lot of research into why we're doing what we're doing. Like, I know for a fact that Versan you've been accumulating, precious metals probably for the better part of 10 or 15 years. And so this isn't something you just enlightened upon, but you looked forward and you saw where we were going. And by the way, were you right? Oh, you are so right. We're there. We are there. I mean,
I had great mentors.
yeah, that's true.
Great mentors.
And it helps, but definitely you were exposed to, and it changed your philosophy about investing, about, preserving your wealth, not just accumulating it. And these are a lot of the big factors that most of retail, they're not even thinking about. They're just jumping in. I mean, how many people we'll see on a Discord? Oh, you got to get this meme coin. They dive into it because, they want it to be the next Shiba Inu, and they get wrecked. They get totally wrecked. And so I think that there is something to really learn in that. And that is hopefully what people are getting. That is at least how I see it. And so, yeah, look at the fundamentals and really focus on those fundamentals. Technicals are going to change. Sentiment is going to change. Obviously, a lot more volatile, but the fundamentals are slowly building and we're seeing it happen. And for me, that is where the value really is understanding what's going on fundamentally. This is a fundamental shift, probably has not happened in the last 1,000 years since the invention of coin. And I think it's going to be a tremendous shift in wealth. Probably, like I often like to say, the greatest wealth transfer in the history of mankind will really take place. But a lot of the people that are in this space right now, I honestly do not believe they are going to be there to see it because they're just too tied to the sentiment piece.
Edo, I'd like to hear your thoughts on this, but I totally agree with you, David. Definitely been working on one thing I'll compliment before I let Edo speak, and this is something I keep seeing in the comments as well. The financial system and everything that you see happening in the world, as far as the digital ecosystem, there are multiple layers of interoperability that are addressing very specific functions in the ecosystem: money flows, liquidity, settlement, and other technologies, bridging things together, regulations, and so forth, digital IDs. So yeah, it's not just XRP. And on this podcast, we have spoken so much about the XLM as well, the Stellar Network, and what they're doing, what they're accomplishing. Written about this extensively as so much as well. Also Hedera, HBAR. I know people keep asking for us to talk about it, but it's just there's too much information out there. You this is why we have sessions, and we're not trying to sell you anything here. But if you're serious about wanting to learn about these technologies individually or how they can correlate together, I mean, it's not easy to put this on a podcast and just try to bridge it all together for you. You need to take some time to sit down and either do your own research or sit down and ask these questions and let us explain it to you in detail and try our best to kind of bridge it for you. And of course, give you a strategy how to invest in this ecosystem. So I'm just telling you guys the truth over there. I've tried for years. And if you go back to each of my podcasts and these turning points I've done with my dear friends here, we have covered almost everything. And I'm talking about SHX in detail, Velo in detail, how they relate, XRP, of course, XLM, Stellar, Quant, IOTA. So we've covered this stuff. It's just you're not going to get all this information in one video. You have
Yeah,
to
it's difficult.
go back and listen, because I feel like I'm just continuously repeating myself, and newcomers keep coming on and asking the same questions. So it's challenging addressing all the questions here, and this is why we have sessions. Also,
Yeah,
Patreon, you know.
it's difficult because we try to keep it also not as long. Nowadays, it's very difficult people to sit down and watch a 2 hours live stream. Also, we have busy schedules. We are in different places of the world. I am in Europe, for instance. They are in America, so it's not so easy to coordinate with the times. But before we just wrap up and end the live streaming, there are some super chat questions, Versan, and I'm gonna quickly answer them. And if you have anything to add, Versan or David, just go ahead. So I'll go quickly to the questions. Someone said, when you travel, is it smart to hold your crypto wallet or keys, or should you store them in your home? Honestly, I don't think it's smart to actually bring your wallet unless you need access for some specific purpose. I would just leave your wallet, not necessarily at the home. I don't know. Some people live in the safes in the bank, or each person has a secret spot, let's say, but I don't bring my wallets or my keys when I travel. I don't know about you, Versan and David, if you want to add something about this question, but from my side, I just prefer to leave it. I don't bring with me. And now there is another one. Anything to add, or can I go to the next?
I'll just add something real quick. This is why it's important to have some cash on hand, or maybe if you were, didn't want to take it out for security reasons, what you do is you sell a portion of what you need to be liquid. And this is why I encourage people to always be liquid, even though you're investing, so that if markets turn around in this uncertain economic environment that is heavily manipulated, you're not down when you don't want to sell. You want to have some cash. So being diversified into these tiers of asset protection, this is a great idea. You should always be liquid in some way, form, or fashion. So, and I also want to let people know that the regulatory environments as well, even in China, for those who are trying to pull their money and walk out with their Bitcoin outside of China, they've been stopped at the airport. They've had their wallets confiscated. So this has happened before. And as the regulatory noose gets tighter and tighter and tighter on people, I think these are things you do have to be concerned about. So leaving your wallet at home is probably the safer idea, but being liquid is also safe. That way you don't have to bring your wallet with you. You can have cash. Maybe you can have some other form of payment. So, I mean, it's really concerning. I totally get the question. I've thought about these things myself privately, and this is why I'm very liquid.
Okay, this one is quite complex. I mean, we could talk 1 hour about this question. I'm going to make the best to answer it very shortly. Can XLM overtake XRP? I'm saying that because not too much news about XLM, and I think it will be special for XLM. Now, I can try to answer this as short as possible. I would argue that it would be the same to say, can Rolex overtake Louis Vuitton? Just one example, because it's two different categories. Although the two are for clothes and accessories, it's not really the same pile that they are fighting over. You have XRP with institutional grades use case more tied to the banks, and then you have XLM, which is also an excellent technology, but they are focused on micropayments, accessibility for new users to access blockchain technology. And well, their motto is literally bank the unbanked. So although they are great assets, I don't think XLM can ever overtake XRP. They are just two different. They are built for two different purposes. That's my answer for this one. Not sure if you want to add something, Versan or David. I know we can talk 1 hour about this, but
I'll let David
No,
go
yeah.
first
Oh,
because I
thank
have
you.
something to add.
Yeah. I totally agree with that. We're talking about, yes, these are very similar technologies. And we know that Jed McCaleb was, one of the architects of the XRP ledger. And, it's a fork of XRP, if you would. But I think you're right. I think that they're servicing two very different markets. And so, I mean, to say, like, in what way are we talking about overtaking it for market capitalization? In what way are you really talking about it there? I don't think you can really use market cap when it comes to an asset like XRP, primarily because, it's impossible to gauge a utility that will function to the extent and capacity of XRP and then try to slap a market cap on that. I just it's to me, it doesn't really, it's not the right way to measure its overall potential. And that capacity, look, I think in terms of utility, they will both have a strong function. I think in terms of, like, one of the things to point out is that both Ripple and Stellar were the only two blockchain organizations involved in the on the ISO 222 Messaging Standards Council. And so they both have a significant seat at the table. And I do think that they will both have, a great use case in the new digital economy for certain. But they're totally different. And so it's like, is an apple going to be as sweet as an orange? Well, totally different type of thing. And that's how I look at it as well.
That's very
Perfect.
interesting. I'll try my best to be quick, but I think it's very interesting. I think they complement each other in many different ways. I really do. Um, like an infinite cycle of XRP and XLM that kind of feed off of each other, you know? Maybe we were taught that they had a falling out, and you look at all the big moves that are happening quietly behind, and you start to realize, well, there really wasn't a falling out. How come also Ripple is actively investing in key network protocols that are further strengthening the Stellar network? Example, Ripple has been backing SHX Stronghold, which focuses on creating asset storage solutions and things of that nature. So this investment, in my opinion, kind of supports Ripple's broader vision into building infrastructure, into the secure financial future. So it's very interesting. Also, if you look at the Bank for International Settlements, in their private cryptocurrencies, they disclose that they need retail money and institutional money. And they're talking about two. And this is something Lynette Zhang and I talked about in detail, about this money flower, where they have private assets that they're going to be using. And into that money flower, they had two private cryptocurrencies. Now, they didn't say XRP and XLM, but then when you look at the World Bank covering XRP and XLM, you look at the IMF, they've discussed Ripple and Stellar previously. So you start to put these things together and you're like, okay, well, what are they not saying? Even the United Nations has covered both of them. So I think there is a relationship there. What that relationship really consists of, I don't know. But it is very interesting. And I think they do complement each other in many different ways, where one feeds off itself. XRP, for instance, they provide liquidity and scalability issues. And when you look at XLM, what are they doing? They're ensuring smaller everyday transactions that can move smoothly within this economy. So I'm sure we're going to see a lot more once the Clarity Act is comes into motion and is enforced. So those are my thoughts. I know it's a bit detailed, and I appreciate everyone being patient.
Yeah. Now we have one last question. And just to add something on the XRP XLM, still on my whiteboard, I made a detailed video on the two of them. If anyone is interested, they can check my last video. And this is difficult to answer. What's your advice on first-time home buyers? Because I don't know where this person is located, if Europe or America. I'm definitely not qualified to talk about the American housing markets, but I can answer sharply for Europe. I'm heavily invested in real estate, and here is a quite different scenario than America. Especially for the European capitals, you can't build new supply. There is not enough space. There are several construction issues and regulatory frameworks. So the supply is very low on the European capitals, and there is a high demand, a constant demand for real estate. So I have been accumulating, buying properties, especially in Greece. I think buying properties here is like buying XRP at 50 cents, and I have several evidences for that. Now, when it comes to America, I know it's a completely different scenario. I also heard some qualified people that perhaps David can answer that better, but I will just stay with my realm, which is the European house market, which is great, to be honest.
Yeah, I think that look, whenever you're asking advice, whether it's real estate, digital asset space, or whatever, remember these are markets, and we're not financial advisors. So anything we say is kind of like our personal 100% bias opinion. So you got to take that with a grain of salt because, but what I would do is what we've basically all three of us have encouraged is go out and do your research in those markets because as regionally, real estate market can be on fire in one region and totally depressed in another. You can even see this inside counties, let alone or cities where one side of the city is just booming and the other side of the city, it doesn't matter. It's all a bust. So it's really hard to tell. And the issue too with real estate is, we see different types of real estate. You've got commercial real estate, of course, you got the residential real estate. You're talking about home buyers, you know, um, it just there's so many factors at play and I guess you have to answer the biggest question you want to answer is okay, why? If you're doing it because you want to be a first time home buyer and you're thinking about like you said there and you're thinking about okay, I'm paying more in rent than I would pay in a mortgage if you have to mortgage it. Well, if you have to mortgage it and borrow against it, then there's the conditions of your mortgage you want to look at as well, right? I mean, what kind of interest rate are you getting? Is that a good rate in this environment right now with rates on the way of coming down? What would be a good interest entry point? Should you wait until the rates drop even further, especially if you're locking in for 30 years or whatever? So, I mean, there's a lot of things to take into consideration because, of course, inflation, you know, forms a part of that decision too, because in a deflating dollar, well, then real estate prices are just climbing, aren't they? And so you could get yourself priced out of the market, and that's another big deal.
Well, you have to ask.
Yeah,
Yeah,
go
to
ahead, please.
your
Hassan, finish
point. Sorry about that. Thank you. To your point, yes. Again, going back to the fundamentals, they haven't changed. So if the fundamentals haven't changed for a lot of people that are now looking to buy a home, and I've said this before, even I'm trying. I can buy a home right now. I've decided not to because it's not in my interest to do it just yet. It's so expensive to buy a home. It's very expensive to maintain a home. Now, if you have lots of capital, it's different. But if you're working with limited capital and you have to go borrow with these rates the way they are today, and sure, we're going to get lower rates later on, but it doesn't matter. You're still stuck buying a home at a very high price, and it's just not a practical investment, in my opinion, for a lot of people. And when you look at the trajectory of where the dollar's going, the country's going, all the political unrest, the civil unrest that's going to result and stem from it, people are not looking at the bigger picture as well. So, this is
And
just generally speaking. Now, I know someone here just got a home recently, but also it depends on location, like Edo said. But
mhm.
for me, it's not my interest to buy a home. In fact, personally, and this may not resonate with everyone, I've made it clear I will never buy a home in the United States until real change comes. And I don't think that change is anywhere near.
Yeah. I think Robert Kiyosaki one time was saying, well, look, you can't look at a home, your own personal residence as an asset. It's more of a liability. And I think there's a lot of people that have that point of view as well. You're not buying a home for it to become an asset and in that in that kind of capacity because you take in your taxes, the repair costs, the interest, servicing of the interest, and a lot of that, it becomes a big time liability. And if anything goes wrong, well, you're the one fixing it and all that. So there's a lot of factors involved in that decision, not just market conditions. I think Versan made a very good point there. I think a lot of things are involved in that, and it would really depend on your personal financial situation.
Yeah.
It's a
Final
very
thing to say.
complex
Well,
question.
Yeah, yeah.
this is
But my
last
last
thing.
statement, I was gonna great minds think alike.
Well, no, this
I
is
was
inside information. Inside
oh,
information. We had a
oh,
conversation on this channel before with
yeah,
Gary Cardone.
yeah,
Now, Gary Cardone is Grant Cardone's brother.
yes.
Grant Cardone and Gary Cardone told us off record after the cameras were down. We started laughing and really getting to know each other a bit better. Vindel and I tried to have these in-depth discussions on things we can't ask on camera. And we said, what are you guys doing really? Like, why aren't you in XRP? Things of that nature. And they said they were selling all their homes in Florida, all of them. And he's still promoting, go buy a home. This is how you do it. This is real estate. This real estate. So he's telling people one side of the story, salesmen. I know a lot of those people. And on the back end, he's actually selling his homes, and they were all getting into Bitcoin. So they've been lying to their people. And I had to share
misleading,
that
at least,
because
at
it
least,
just
at
shows
least
you how
not,
full of crap
yeah.
these people are,
Yeah, at least not divulging the whole thing there. And I think that's an important point. That is how the psychology of the market works. They will say one thing over here, like Larry Fink did for many, many years about, oh, no, none of our clients are interested at all. And this is only 3 years ago. And now he's making a world tour about the tokenization of all real world assets, including ETFs. Come on, it's just nonsense. But yeah, no, my last statement was going to be, guys, no matter what market you're in, be very safe about how you approach it. This whole fear of missing out, it's a real deal. And it's not just getting in, it's staying into things. And so this is where you really, really want to learn and understand this, like I said, the psychology of the market, how to develop a strategic investment plan, how to balance that towards your own personal goals. That is what I would encourage. That's what I've constantly encouraged. And, I would just say be very, very conscientious of that and be safe. And that's my last. And guys, by the way, very great to see Edo back. Second time you've been back, Edo. And I'm so happy you're here, my brother. I really appreciate you.
Yeah.
Thanks for your kind words, David. It's definitely feels good to be back. I have been fully back in all my channels right now. Okay, not all the channels that I still possess. I have been creating content once again, and it has been helping me a lot mentally to keep me busy. And finally, I really see light at the end of the tunnel with everything that I have been through in the last months.
Beautifully said. Yeah, man, we've been doing everything we can. So I'm just glad to have you back. I missed you a lot, buddy, and the audience did too. I kept getting comments about you, so it's going to be great, and we're going to do a lot of videos together and keep the community up to speed on things. So yes, and also I want to thank somebody in the comments on my marriage again. Yes, I am married. We are planning a honeymoon. It hasn't actually started, so I want to do something special. The wedding was very expensive, so we'll deal with that later on. But thank you so much, everyone, for all your support. Much love, and just be vigilant. All right, we'll see you next week.
Feels better to spend in marriage than in lawyers. Trust me.
Well, when you love someone so much, I think it doesn't.
Feels good.
You go all the way.
Yes.
Absolutely. Absolutely.
All right, everyone, take care. Okay.
Thank you, everyone. Gonna see you next week.
Bye.